Hey everyone, this is Peter Johnson. I co-lead crypto investing for Jump Crypto. And Jump is many things. We're a venture investor, we're a large trader, we're a builder in this space. And today I am very excited to be talking with Raoul Pal, who is global macro investor and the founder and CEO of Real Vision. Thanks for being
Hey
here.
Peter, great to see you.
It is great to see you. And today I am excited to talk to you about community-based investing. But before we jump into that, I think most people are probably familiar with you. But just in case they're not, what's the background on you and on Real Vision?
Sure. So my background is 30 odd years of financial markets. I was at and in and around the hedge fund industry. So I was at Goldman Sachs, where I started and ran the hedge fund sales business in equities and equity derivatives. I then ran a large macro hedge fund, started and ran a large macro hedge fund for GLG Partners, which was one of the biggest hedge fund firms in the world at the time. And then kind of opted out of the rat race and moved to the Mediterranean coast of Spain, as you do, and started writing macroeconomic research and investment strategy for the world's biggest hedge funds, family offices, sovereign wealth funds, asset managers, that kind of thing. And I had the crazy idea that we need to democratize financial information after going through both the financial crisis and the European crisis. And I thought, well, I had to do something about it, because people at the epicenter of the system kind of knew everything, and the people on the outside didn't know anything, and people got hurt. So that was the idea behind Real Vision, to democratize the very best financial information. So we started a media company to do that. So that's basically my story in a nutshell.
That's great. And at Jump, I've been in crypto for a long time, since 2014 or so. I feel like I've been listening to you talk about crypto for a long time. To tell us more about your story in crypto and what you're doing in crypto now.
Yeah, so my story in crypto is, it was the European crisis 2012 that we almost lost the entire European financial system, because the collateral of the system, the European government bond market, was going to go bust, whether it was Italy, Spain, France. And it was at that point, and after the financial crisis, after Lehman going under, I realized one of the big issues with the amount of leverage in the financial system is nobody knows who owns what. So it's a big mess, because there's leverage on top of leverage. And even the OTC derivative markets, there's just piles of swaps documentation under people's desks. I mean, the people couldn't process it fast enough to even know where the derivative lie. And there's over one quadrillion of derivatives open. So I thought, this is a big problem, and if we're not careful, something's going to go really horribly wrong. So I went around the world trying to start the world's safest bank for a period of time. And then somebody tapped me on the shoulder in 2012, a guy called Emil Woods, and said, you need to look at Bitcoin. So that started my journey into Bitcoin. I first bought it in 2013. I wrote the first macro strategy paper on Bitcoin in 2013, where I looked at the stock to flow. I didn't know it was called stock to flow then, but I looked at the stock to flow of Bitcoin versus gold, and concluded that with gold at $1,300 at the time, Bitcoin was worth, on an equivalent basis, about $1 million. I thought, well, that's a hell of a risk reward, because Bitcoin was $200. So I thought, even if I'm a total idiot and I'm 90% wrong, it's still worth $100,000, and it's only at $200. So that's when I first bought it, got involved in it, held it all the way through the bear market, through the bull market 2017, sold out too early as the forking wars were taking off. And I got confused, thinking, I don't really understand all of this. So I took profits, got out. And then even when we started Real Vision, I think the very first video in 2014 had Bitcoin in it. And then, my interest in the whole space exploded. I knew that when we get to the next recession, macro and crypto were going to meet. And that came in 2020. And that was the signal I'd been looking for. And that's when I kind of went irresponsibly long crypto, put 100% of my liquid net worth into it, and then broadened out into the space. And since then, it's been a journey for Real Vision. We built out Real Vision Crypto, which is a free video channel for crypto, with newsletters involved in it as well. We've got a crypto research business that we built with Delphi. And then on the side, I've started a crypto fund of hedge funds, getting institution family offices and others to be able to invest broadly across the hedge fund space in crypto, and a number of other projects as well. So I'm kind of all over the space now.
Yeah, you mentioned a couple interesting things there. One, the irresponsibly long quote. I remember that distinctly. I was also irresponsibly long at that time, and that was absolutely the correct call at that time. And you also talk about the lack of transparency back in the last financial crisis, which I think is interesting. Right now, we're seeing kind of the opposite of that in some of the like liquidations, and I don't know if you were following that there was like liquidations going on in Maker. Yes, but you could see exactly what was happening. It was fully transparent, which is totally different than the traditional financial system.
And also, I love the way that the kind of new digital asset markets liquidate. Yes, it can be a bit messy and ugly and cause spikes, but what you're not left with is the systemic risk of somebody holding the loss. It kind of gets liquidated, it's over collateralized, everything moves on. So it actually trades more like an options market where you're long the option, you kind of get stopped out of all your premiums, like a binary option. So it's really interesting. It's systemically much better, I think, than the current system. I mean, the current system would not, the traditional system would not have dealt with a 50% drawdown in a matter of weeks and somebody not blow up. Yes, of course, people have got trading losses, but systemically, everything held together. I mean, I put out a tweet about DeFi asking people, look, anything break? And yes, Solana was a bit slow. The liquidation in Maker, but that was kind of doing its job. Nothing broke. And that's super interesting to me.
Yes, absolutely. So the title of today's discussion is community-based investing. So maybe first, I'd love to get how do you define community and based investing, or how do you think about that concept?
It has long been known that we talk about the madness of crowds, but actually crowd-based forecasting tends to do better, which is one of the reasons why the S&P 500, only one of the reasons, outperforms other things. It's quite difficult to beat benchmarks because actually millions of investment decisions by millions of people actually produces quite decent returns if people are focused on it. There's a great book called Forecasters that looks into this in more detail. And can you improve performance by giving the crowd certain elements and tools of knowledge, or curating the crowd to do even better? So I had been thinking this through, as many people have, are crowds smart or not, when I noticed on Twitter something called the Real Vision bot. And it was this kind of meme speaking in Real Vision, kind of weird wording, but it was kind of a bit jumbled. So I was like, what the hell is this? So I reached out to the people and said, what are you doing here? And they're like, oh, well, we're actually quants and from Munich Re Quantitative Strategies. And we've got a side business, 2 quants. And what we've been doing is scraping the transcripts of Real Vision and creating a portfolio around it. So what does all this bot speak then? He says, oh, we're messing around with GPT-3 to see if we can get the bots to actually speak in Real Vision language, but it doesn't work. So we found it funny. So I said, listen, let me give you all of the transcripts and let us know what you find. So they start building sentiment analysis from the interviews and also portfolios based on how people are talking about various asset classes. And that portfolio was now the portfolio of the experts who appear on Real Vision. Now, there's an editorial bias just by the fact that you can only have a certain number of interviews, so you can't cover everything. So we launched something called The Exchange, which is our social media platform as part of Real Vision. And I reached out to those guys and said, can you start surveying our members for asset allocation? So we did it in macro land first. And then macro asset allocation was beating the professionals from that algorithmic model of scraping the transcripts. And that was a light bulb moment for me, because if you think about it, Real Vision is a community of like-minded people who are kind of on a learning journey. They're all self-selectively smart because we don't really have the beginner part of the financial journey. So to come and engage with the content, you're relatively sophisticated and you spend a lot of time learning. So that crowd is probably going to outperform the experts. So that was interesting. So then we thought, well, could we look at this in crypto and spread it to a broader community into crypto Twitter as well and find out? And they've been running that whole test for a long time, and it's basically outperformed Bitcoin. And what's interesting is you and I would never construct a portfolio in the same way. It's like there's no kind of portfolio rebalancing and slow shifts and tilts. It's like one day something's out, the next day something's in. Someday ETH is like 80% weighting, and the next minute is out of the thing. You're like, wow. But even in the madness of that, in a non-traditional asset allocation, it's done pretty well. And that was a really light bulb moment about the power of community and power of what I refer to as the hive mind.
Yeah. And do you think that is applicable? You said you started doing this in macro and then in crypto. Is this applicable to all asset classes? Is it more applicable in crypto because it's an earlier, more efficient market?
No, I think, as you and I spoke about when we chatted the other day, I think it's going to apply to VC too. I think it's going to apply to everything. There is ways that it's not saying that there can't be experts who are better than the crowd over time. There are people who, statistically have proven that. Stan Druckenmiller will be a great example. But I think it applies everywhere because it's this DAO idea, really, where you put a like-minded group of people around a particular problem and ask them to solve it, which is exactly what that Super Forecaster's book was about. And basically, they will have a higher chance of solving it, particularly if they can discuss with each other how they're trying to solve it. So I think it will apply to anything, from single stocks to macro to crypto to VC to art investing to anything. And we've seen the rise of things like the Flamingo DAO that's starting to prove it out. Now, it's too early days to see how well this works, which communities are good, which ones aren't, because it's going to be about the quality of the community, really, and a long enough track record.
And what will that mean for folks like me, VCs, investors, hedge funds?
So
what does that mean for the traditional institutions in this space?
I think the traditional institutions remain because of how they operate within the space, the sources of capital, and how actually investors want a one-on-one relationship with the VC investor. But my guess is you will be a part of multiple DAOs in due course, where you are one of the people involved in that DAO, and that's how you'll think of your VC portfolios is, oh, we've got 20 DAOs that we're investing in, that we're part of the discussion, where we're pulling together with other smart people. The Delphi guys are in this DAO, and Andreessen Horowitz are in this DAO, and we're all trying to solve this particular thing, and that's what we're investing in. And then you'll have your own portfolio of other opportunities that don't have this kind of shared structure, because sometimes it's your own view, and you want to back your own view. So I think it's going to be a hybrid, but what it does change is the economics of the industry, because it's so much easier to do via a DAO structure than it is via a fund structure.
Yeah, I completely agree with that. And I think that there will always be a role for value-added investors, folks like Jump, for example, that can bring trading and recruiting and help with community and all of the things that we do. But we're big participants in the Alliance DAO, which is a DAO with 300 other investors, founders, et cetera, that we all work together to help accelerate and incubate companies, and we bring all of our strengths to that. And I agree with you that I think that is going to be a big part of the future of investing.
It does feel like there's a total disruption of the asset management industry that started. It's really early, but it's starting, because the speed, index funds, the speed of which you can do that in a kind of new Web3 enabled platform is dramatically different. How you can build like Millennium, which is a hedge fund of multiple different fund managers. Well, platforms like Enzyme create the ability to do that decentralized. So therefore, you as an investor could invest across a whole bunch of different strategies and different people, of which it was not available to you before, whether it's accredited investor rules or just discoverability of finding these people. But with this kind of open Web3, you could scrape all of the data, look for signals on which managers you think. You can be your own risk manager. Okay, that's really, really interesting. It's not easy, but my guess is, people like Jump will have a team of people looking at independent traders operating on these Web3 platforms and backing them too. Because why wouldn't they? And why would Millennium not do the same? And why would Brevin Howard not do the same? They all will in the end. It's going to be not necessarily all on one platform or in the kind of fund buckets that we're used to.
Yeah, I'd love to hear more about that, because I completely agree with that. This is democratizing the ability to spin up and start your own fund and manage other people's money. Um, like, how do you look at that? Because historically it has been, if you wanted to start a hedge fund or a venture fund, there are very large barriers to doing this. And now you're doing this, if you're doing this on chain, um, hypothetically, like anybody can spin this up and anybody can invest in these types of things. And it seems like that's, the direction that this market will be going.
Yeah, I mean, obviously regulation, that's the big issue. We don't know how it's going to solve for that. But this is a huge unlock, particularly in crypto, where the knowledge base is not with the guy who went through Goldman Sachs and ran a fund for somebody else and then spins off and gets the credibility. If you're an NFT trader and you've got 18 months of experience and you kind of know what you're doing, right, you could attract capital. You couldn't do it in a fund structure because nobody's going to give it to you. But in this online version, where we can all discover that because it's discoverable and it's provable, the track record and everything, then we get an ability to allocate to a 22-year-old who's the wizard of NFTs. And we have the liquidity that we could move out when we think he's lost his touch or her touch. So I think that's interesting. And I think how we provide capital to markets will move away from the fund structure. It's really expensive. I mean, the reason the lawyers in Cayman Islands are so damn rich is because of this fund structure. I mean, they're very highly paid people here because of the fund structure. Now, that goes away because it doesn't need to happen in all of the way that it's done. It's the issue is the accredited investor rules, but different jurisdictions will choose different ways of doing it, whether it's Switzerland or whether it ends up being Singapore or Cayman will allow people to invest in these kind of structures. And, I'm thinking through the fund of funds that I've set up. Right now, we're investing in the world's best digital asset hedge funds. But it's right on the roadmap to start providing liquidity to platforms where we can back traders. Why would we not? Because that's where the source of talent's going to be. And there'll be hybrid models as well, where to institutionalize them, they might need to go onto a different platform, a more, credentialized platform with better risk management. But all of this is going to be available. It's just going to open everything wide up to us all again.
Yeah. What do you think is the biggest thing holding us back from that vision, where you can easily invest in, the 22-year-old who's trading NFTs, or the brilliant trader, or the VC that's just starting up and starting an on-chain, strategy? Like,
I think it will come. Firstly, we need a success story. Humans like the human story. So we need to see, here's the guy who's made, X from doing this. So we need to see some success. It's very early still for most of the platforms that are building this out. So we've yet to see capital coming in, and really the crypto markets are kind of constrained by capital right now because we've got no new flows coming in net. So the network growth of Bitcoin, ETH, and the overall thing is not really growing. So we're seeing a lot of churn within, and that's typical of markets. That happens for a period of time. But my guess is, this is a part of DeFi that people haven't even thought through yet. Things are moving so fast that it doesn't attract much capital yet. But as the space grows, I think people are going to realize what this is all about. The DAO structure itself is starting to work and, starting to attract significant capital. People haven't thought about it in the decentralized asset management area and tokenizing either individual traders or pools of capital, but that will come for sure because everybody's working hard to solve it.
yeah. And do you think those traders that are tokenizing their strategies, running these on-chain strategies, will be traditional asset managers that come into this, or will this be the new 22-year-olds that nobody's ever heard of before?
I think it's going to be a combo, but it's probably the young unknowns because everybody else has a fund structure. There is a way of raising capital that if you have the fund structure and you've got the right lawyers and accountants and auditors and blah, 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 that you can attract capital. So that doesn't go away, that strategic advantage of doing that, and it costs a lot of money. But what it democratizes is the ability to access capital as a trader with a proven track record. We've seen there have been there's things like Fund Seeder, stuff that's done it in the kind of Web 2 world, but not quite the same as this because, the ability to find decent managers on a platform like Fund Seeder is very different to be able to just buy a token instantaneously in somebody who you think is running a great strategy. So, I mean, it's all coming.
Yeah. And do you think that the tools are there now? We've talked some about Enzyme and Avant-Garde. Are the tools there now for these folks that want to build on-chain strategies, community-based investing, or are there still things that are still missing?
So at Real Vision, we built out a Web3 team, and one of the first things on our list is this: see if we can tokenize this community asset allocation strategy in crypto markets. Now, it takes a bit of work to figure out. The hard work is the legal work. The platforms are good for various things. It's still, again, there's not a lot of options yet, but they're really interesting. And we've spoken a lot to Enzyme, Avant-Garde about what the potential is. It's actually the legal risk here. Is how the hell do we do this? Do we have to gate US investors? What do we do? That we need to be cautious with. And I guess other people are thinking the same way. But we will solve it. There will be a way. Now, it may not be openly democratized, i.e., maybe not everybody can do it. Maybe we only start it first with, heaven forbid, accredited investors. So you have to prove something first. I know that's clunky and suboptimal, but it's a start. And if we can help drive a nascent industry forward, it's a right thing to do.
From a regulatory perspective, that's come up a few times. Like, how do you think that gets resolved? Does it get resolved? Is this something that is mainly available outside the US? Like a lot of token offerings are these days, new token launches have largely moved outside the US. Is this something that active management, crypto is also going to move outside of the US, or just be available to accredited investors? Like, did you have a view on how that gets resolved from a regulatory perspective?
I think the US has to resolve much more like the rest of the world. Singapore, I think, has done a really great job of this. And I spoke to the chief fintech officer for Singapore and talked about regulation and how he thinks about it. I said, how are you dealing with retail regulation? And he's like, simply put, is we can't stop people. So what we have to do is give them warnings. So people understand that you can lose your money. Same as if you go to the racetrack and bet. They don't stop people. Why should they stop them investing? That's crazy, right? Betting is a probability game that's actually harder than investing, but people are allowed to bet. So they need to think this through and decide, okay, how do we warn people of the risk that they're taking, that they can lose all of their money, much like people are able to do on Robinhood with options. It's defined loss, but we can have defined loss in crypto. Smart contracts allow us to solve everything. So I think the US is going to have to adopt the same kind of methodology that Singapore has done and other countries have done. It makes no sense trying to perpetuate a system where the money flows has to go through the investment advisors, the investment banks, and stuff like that. You need to democratize that. And then you democratize capital. And that creates all sorts of opportunities. So I think the US will change. I think it's a generational battle in the US. And I think it's going to get fought by the millennials and Gen Z now being a much larger part of the voting. The issue is the senators and the congressmen and women are all boomers, really. We got a few Gen Xers in there. That's it. So the generational shift has to happen. The problem is politicians are staying in office for longer and getting older, much like the population is. So that needs to get solved. Singapore is a younger population in certain respects, and many other countries do, and I think that will change. Europe, mixed bag, but I think Europe is less aggressive when it comes to this kind of thing. But the UK is a bit behind, so it's messy.
Yeah. I am hopeful that the US will be smart in the regulatory approach. It's a wave that's coming. Like crypto is coming. Crypto is here. Decentralized asset management is here. Like, yes.
What is clear to me is there's going to be a bunch of DAOs that get spun up for elections funding, and they will be party agnostic, and they'll fund crypto candidates. Why would they not? If they're trying to buy the Constitution, why would they not do this? So it'll show how they can mobilize capital super fast to fund things that ordinarily would have been done behind closed doors in Washington. And that's a lot of voters. So there's something interesting that's going to come of this. It's not really on people's radar screens yet, but that's going to force change.
Yeah. Did you think that was just because so Constitution DAO? My view is that was just the beginning. That you're going to see DAOs for political actions. You're going to see a lot of investment DAOs. You're going to see DAOs for different causes. That was just the tip of the iceberg on what Constitution DAO
That is
was.
all about the power of crowd, right? It's the power of a networked crowd. That's what's all about. That's what this asset management product we're talking about is. It's the power of a networked crowd to coalesce a single idea and solve it. Whether that's an investment portfolio, or that's a political issue, or that's an ecological, charitable, social issue, or it's just because they want to buy a football club, and it's only billionaires can do that. Well, it doesn't have to be the way now, because we can be the billionaires, and you only have to put in $500, and you can be one of the billionaire owners of a club. It's really interesting. I mean, the genie is just out of the bottle, and the failure of the Constitution DAO is probably a good thing, because it gives people an understanding of the battlegrounds that they have to face to win some of this stuff.
Yeah, absolutely. As you were talking about DAOs and community-based investing, it got me thinking too, because there's two different concepts which are intertwined here. One is like community-based and the wisdom of the crowds, which you've talked a bit about. And then there also just is democratizing access and giving people the ability to show that they're good investors and give other investors access to those. I think that those are both powerful concepts. It seems like you do too. Do you think one of those is more?
Well, so again, if you think about it, to be thousands of people write to me saying, I want to start a hedge fund, I want to raise money. I'm like, forget about it. It's impossible. But this changes it, because what you're doing is lowering the capital access point to a more democratized level. So as opposed to saying you had to be credentialized, you had to be ex-Goldman Sachs or ex-JP Morgan, you had to have done this, you had to have some success, maybe work for a bigger hedge fund, then spun off, then you can raise money, right? That's impossible for almost everybody. But that doesn't mean that that's the best trader. So what you're able to do is test it. You can put your own money, back yourself, show it on a platform, prove categorically via blockchain that these are your results, right? That gets rid of all the legal and compliance and all of this stuff. And now you've got a chance of accessing capital, because regular people can invest in you. Okay, none of that is possible right now. Regular people investing, discovery of the managers, a compliant way of running money for people in a way that's verifiable, and the ability for a young trader or less experienced trader in the traditional metric can get access to capital. So every part of that is new and exciting. And also this crowd-based, right? Because we've been taught so much about the power of a guru, the one person who will make our dreams come true. Well, at a societal level or community level, we can solve that too. And again, if I look at the people, we surveyed our members at Real Vision. Well, surveys don't help. We actually asked them to send in videos. The question I posed to them was like, who the fuck are you? And why are you watching Real Vision? First one that came through was a neuroscientist in South Korea in a lab running experiments while watching Real Vision. I'm like, huh. Another guy came through, was a astrophysicist working in an Atacama desert on the world's largest telescope. Another guy was a retired pension fund manager from the UK. Somebody else was a Silicon Valley product manager. Somebody else ran game parks in Africa. And it was at that moment that I realized that imagine being able to pick all of their brains. All of these different people who are hugely experienced in something, and contextualization to a larger problem. Now, if you look at the GameStop thing, forget all the headlines. What did Reddit actually do there? What you did was showcase to the world the power of a crowd. And it wasn't about the capital that they poured in and moving the price. If you actually went on Reddit, there were forensic analysts, macro people, technical analysts, all of these people adding to the knowledge base of the crowd. Right? That was genius. And again, traditionalists don't like it. They all think it was stupid and everyone was playing meme stops. No. There was something much deeper to all of what happened then, was saying that we as people can solve this faster and better than a hedge fund. And the same is
Seems
true,
like
I think, of the research world too. I mean, I'm after this about to speak at the ARC Big Ideas event. I mean, ARC have crowdsourced research as well. Why? Because if you are a traditional analyst, you're taught in a certain way to talk certain things, you've got certain conflicts of interest, you've got this learning that you've picked up or accumulated that gives you a set of biases. But you know what? Somebody would have seen Tesla much earlier, because all the traditional firms say it couldn't happen. But people who were not involved in the finance space saw it well earlier. And I think that's really true of all of this.
Yeah. So what's Real Vision's plans to take advantage of all of this alpha, this
So there's
knowledge that can come from the
three
community?
things. Yeah, we've hired a Web3 team, and there's some guys who come out of Millennium, interestingly enough. One of the guys who's come out of Munich Re, Quantitative Strategies, head of quant, and a few others who are helping us pull together Web3. It's the tokenized asset management around the crowd that's really a low-hanging fruit for us. That's interesting because we can do a specific experiment there. The other thing is research. I want to get to crowdsource research that you get paid in tokens. So you could be the 22-year-old who's an expert in NFTs, and I can be paying you some of my tokens. So therefore that means Real Vision has to tokenize at some point. We're starting with NFTs, but we will get there. And then the other part is brokerage. So right now, you might call a broker up if you're in the traditional world, and they give you a good idea and they get paid commission. Well, in the new world, anybody could post the idea, and if I trade it, maybe the brokerage platform gives me tokens. And maybe if Citadel is the market maker, or Jump's the market maker, and within that is a payment to the brokerage house, well, maybe half of that can be used to burn tokens. Then everybody's incentivized and aligned. Everyone's understood you've sold the order flow, and that's okay because you'll benefit because it's good for the ecosystem. And selling the order flow is actually just providing liquidity, but the person who comes up with the idea gets paid too. So that is a really nice Web3 system that can get built out.
So you're going to have a token for Real Vision? Is that what I heard?
I don't think
that is very exciting.
I don't know if we'll get it out this year. We have to go through it. There's legal work to do. But as I said, we'll start with NFTs. We will look at tokenized asset management, look at some sort of point system that can move us towards full tokenization, and then we'll work with Delphi probably to help us figure out, okay, what is the token economics of this ecosystem? But it's coming, and we're working hard on it.
Wow, that is very exciting. And what's the plan with the NFTs?
Well, we started with this research we did with Delphi called Crypto Pro. It's kind of a high-end retail stroke institutional product. So it's kind of that quality end that doesn't really exist. So we built that with Delphi. And then for the pre-launch, we said, look, if you want to be part of the pre-launch of this, you get a discounted price and you get an NFT that's going to identify you as being one of the founders. And then they've got a Discord channel. At any one stage, there's, 700 people in the Discord channel. There's 5,500 people logged into the Discord channel for it. And they're discussing all day because they have a commonality of interest around NFTs, crypto, and Real Vision. So what will that NFT do? It's not been minted yet, but once it does, it'll unlock another set of access points and benefits and utility. And that will allow us to start building other NFT drops around different community behaviors to start giving authority within the community of people who have the token to have these NFTs. And eventually this all wraps into the social tokens.
That is very cool. And when you talk about tokenizing Real Vision, but would you look to fully decentralize the organization that it's owned by the token holders?
No, I think the community should be held by the token holders and part of the economics. Right now, because we're not built from the ground up that way, we don't know, if we want to buy a firm or we get bought or we go public, all of that, it becomes really complicated if you turn the entire thing into that. So what you want to do is give to the community participation in the utility of the network. And that can be separate to equity, and that's fine, because I think the network is actually more valuable than the equity. But we'll see. We've not proven that out yet, but I think in most cases that will be the case. If you split apart Facebook's network from its network utility from equity, I think it will be the largest part. So not necessarily just the advertising revenue. So we don't know, and this is the grand experiment, but my view is that they can be two separate things. It's easier to run a business as two separate things, but some businesses can be started from the ground up, entirely decentralized, and that's good too. I think it's hard to convert an existing kind of reasonable sized business into entirely decentralized, because you don't know what the outcomes are.
Yep, I think that makes sense. I'm looking at the chat, and there was a question here from somebody for you. For somebody that's sat in traditional finance for most of your career, how and to what extent has the perception towards crypto changed, and how much further is there to go?
I think almost everybody in finance now understands there's something very big going on, and there's a general panic to get out of finance and into this new world. I mean, I get hit up by, everybody from partners of Goldman to asset managers to everybody saying, how do we move to this world? So I think the force is unstoppable. It's the time that's unknowable. But as we know with exponential trends, they always feel slow, and then you look back and suddenly everything has moved. If you think of the exponentiality of what's happened in the digital asset market since, I went irresponsibly long back in, April, March 2020, right? That was a Bitcoin only world. Yes, other people were involved in other stuff, but then NFTs, DeFi, social tokens, DAOs exploded. This had all been around, and they were like, no growth, like this. And that's what's happening here. I don't know anybody in the financial space who's now not looking to get involved in some way, shape, or form. I've spoken to the biggest private equity firms in the world, the biggest asset management firms, the biggest banks, everybody. I've given presentations, endless presentations to, investment committees, boards, everybody about all of this stuff.
Did you think the recent volatility, downturn in prices, changes, any of that are at this point everybody's past worrying about that?
I think everyone now realizes it's a feature and not a bug, that you don't get exponential upside without high volatility. Just that's how risk reward works. And the question is do you get compensated for the risk with the reward? And a 50% pullback versus the multiple 100% upsides you get over periods of time shows that time and time again it is well compensated for. So I see no change at all in the number of queries and who I'm presenting to about this. I don't think any of these big investors even care about this volatility, because they need a volatile asset as well in this world, because bonds and other stuff are just non-volatile assets and they can't generate returns, and they've got pensioners who need to reach a hurdle rate, and they ain't going to do it in bonds. So they have to take risk. They understand that.
Yes, and there's whole new ways to have higher risk and higher returns, but also just generate yield in crypto, which I think is a whole new space, from staking yields, from borrowing, to using these decentralized protocols that I think asset managers are just starting to wake up to, that perhaps staking yields are the new bonds, for example.
Exactly right. And also they're learning that there is more alpha in this space than there is in traditional markets, because there's less capital in it. I mean, I don't know, it's probably a trade secret, but it'd be very interesting to go and ask your trading floor the returns of the crypto traders versus traditional markets traders. In various strategies.
Right. Yeah.
My guess is crypto has a lot more alpha for a similar unit of risk.
Yeah, it's a much more immature market. It's a much more inefficient market. I think that there's a lot. I mean, there's just a lot more alpha in crypto, which is one of the reasons I think that there's a lot more. I think that there's opportunity for new asset managers coming up in both traditional and crypto, but especially in crypto, because it is such an inefficient market. The data is so available.
And also think about the sheer number of tokens, protocols, all of this stuff that's going to get even harder when it comes to social tokens and sports teams and pop stars and brands get involved. Now we've got NFTs, it's hundreds of thousands of these things, right? So you've got an exponential growing number of assets. The capital going to the space is not exponentially growing to catch up with it. The complexity of the products like DeFi is going exponential. So all that looks to me like that's alpha everywhere, all over that ecosystem. And the capital cannot grow fast enough to arbitrage away the alpha. That's why this whole thing is what we're talking about, is because that is why the magic is there.
Absolutely. It creates a ton of opportunity for a ton of people. It's a fantastic time to get into this market, because it's big enough to be real, but it's also small enough that it's still wildly inefficient in some ways.
And that's why, going back to where we started this conversation, tokenizing asset management in its various guises, whether it's centralized, decentralized, individual traders, pools of funds, DAO structures, that makes total sense in a world where the number of opportunities is going exponential. You need to scale. I mean, you're simply not going to scale a hedge fund strategy like Millennium or somebody of that sort in the traditional world to manage crypto. You have to think differently. You're going to have to think broader, and you're going to have to think further out the risk curve and where you're sourcing your returns in terms of the kinds of traders you go to. So, it really is a revolution going on, and it's super exciting. And I think a lot of people, even listening to this, haven't really yet figured out how big this is and how much is about to change, but everything's going to change.
Everything's going to change. It's something at Jump we're incredibly bullish on. We're investors in a bunch of things in the decentralized asset management space, including avant-garde finance, as well as other platforms for structured products, for active management, for building indices, kind of a whole bunch of things, because we truly believe in this this revolution that it is taking. And I know we're running out of time here, but is there anything else that I should ask you, Raoul?
No, I think we've covered a lot of ground. What I really want to do out of our conversation is frame it for people how big this is. That what I think about investing, I'm sure you do too, is the best thing is when you've got the wind in your sails behind you, when you've got the secular trend and it's at the point where it's curving upwards. When that happens and you invest within a space, so let's say this kind of decentralized asset management area, well, with that tailwind behind you, your probability of success is going to be extremely high compared to, let's say, investing in banks where you've got headwinds. So it's the obvious thing of secular investing in an exponential trend. People get freaked out by where we are now. Where's regulation now? Where's the adoption now? Where's the big fund that's formed this way now? The point is, you need to live in the future and see where it's going.
Absolutely. I think that's a great place to leave it.
Perfect.
Perfect.
Thanks,
Well,
Peter.
thanks so much.
For joining.
Pleasure to talk.